The Wall Street rally stalls as stocks slip ahead of the Thanksgiving holiday. The U.S. GDP grows 2.8% year over year in the July to September quarter. The U.S. Personal Consumption Expenditures Index, the Fed's preferred inflation gauge, also rises in line with expectations. Asian markets have opened mixed following a weak handover from Wall Street. The GIFT Nifty is also suggesting a flat start so far for our Indian markets. Oil prices remain steady with Brent around $72 a barrel ahead of Sunday's OPEC meet. Gold prices are also off their weekly low, supported by a weaker dollar and the prospects of increased U.S. trade tariffs stirring up geopolitical tensions. And I am not a hurdle, says Maharashtra's caretaker Chief Minister Eknath Shinde ahead of the Mahayuti Alliance meeting today, and promises to support the decision taken by Prime Minister Narendra Modi and Home Minister Amit Shah on the next Chief Minister of the state. Hemant Soren, on the other hand, is set to take oath as Chief Minister of Jharkhand for his fourth stint as Chief Minister. This is the penultimate trading day of the week, the monthly expiry for the Nifty. There is a lot to catch up on. You're watching Power Breakfast here on CNBC-TV18 in the Mumbai News Center. I am Hormis Fatakia. Let's first take a look at how the Asian markets have opened up this morning following a very weak handover from Wall Street. The bigger news that has come in from the Asia Pacific, though, is the surprise rate cut that has come in from the Bank of Korea and was unexpected. The consensus was that they will not cut interest rates, but an interest rate cut has come from the Korean markets there. The Hang Seng trading with losses of around 0.3%. The Taiwanese index is down 0.5%, mirroring the handover that has come in from Wall Street. No significant reaction in the South Korean markets, though, after that rate cut. The Kospi is absolutely flat. The Nikkei, though, is trading with gains of around 0.5%. So a mixed picture coming in from the Asia Pacific this morning. Pull up the GIFT Nifty as well. That'll give you an idea of how our own markets are likely to start off. Well, it was in the red earlier a few minutes back. Now it's turned into the green. The implied open is now suggesting a 23-point uptick at the start of the trading session. So we hope to start off the monthly expiry on a positive note. And in the US markets, then big tech, that was the big drag on Wall Street yesterday ahead of the Thanksgiving holiday today. But that did not change the course of the indices for the month, though, as they are set to end with very solid gains. The Dow Jones and the S&P 500 yesterday fell 0.3% each. The Nasdaq was down around 0.6%. Now on the data front, the personal consumption expenditures price index for October ticked up 0.2% month on month and 2.3% on a year-on-year basis. So core inflation rose 0.3% and the American economy grew at a healthy 2.8% annualized pace in the July to September quarter on strong consumer spending and a surge in exports. CNBC's Rick Santelli has a roundup of all the macro data.
On initial claims, expecting 215,000, we come in at 213,000. That equals last month, but that moves up now to 215,000. That is the lightest level since April of this year. If we look at continuing claims, it remains on its second revision. 1,907,000. I was going to say it's the second week above 1.9, but last week's 1.9 million was downgraded to slightly under. So this remains the loftiest level going back to November of 2021. Let's look at our second time around the block on GDP. It remains for the third quarter at 2.8%. And if we look at consumption, remember last time we looked, it was a whopping 3.7. That was the best going all the way back to Q1 of 23. It comes down just a bit to 3.5, but that still remains pretty lofty. It equals the fourth quarter of 23. If we look at the price index, moved up a tenth from 1.8 to 1.9, but that's still the best progress since it was 1.5 in the last quarter of 23. Finally, let's look at core price action. 2.1%, it sheds 0.1%. At 2.1, it's the lightest, well, since it was 2% last quarter of last year. Now let's switch gears to durable goods, shall we? Durable goods headline number was expected to be up 0.1. It comes in exactly at 0.1. And last month becomes 0.4 instead of 0.5%. If you look at the ex-transportation figure, that is also up, The headline was up 0.2. Ex-transportation is up 0.1. If we look at capital good orders, non-defense ex-aircraft, a proxy for capital spending, it moves up to 0.2, better than expected. That's pretty lofty. But do consider that in the rear view mirror, if you look at capital good orders, we had up 0.7. That was a strong number. It now gets cut basically in half to up 0.3. Up 0.3 ends up the best since June of last year. And finally, let's look at shipments instead of orders. Shipments are up 0.2%, and that is as expected.
Let us also now listen to what Moody's Analytics chief economist Mark Zandi has to say on the U.S. economy going forward.
I do think the economy is in a really good spot. It's performing exceptionally well. President Trump is getting a very good economy handed to him, so it can weather a lot of whatever he plans to do here. But there's a lot of script to be written and a lot of different policies that will impact how this plays out next year and into 2026.
That's all we have on the global market action, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and of course the setup on the F&O side as well. First up, Vivek joins in to get all the market cues you need to watch out for. Vivek, good morning. What's the setup looking like after the handover from Wall Street?
Well, good morning. That's right. Like you mentioned today, important day given the fact that it will be expiry and we'll be heading into the last expiry as far as the calendar year of 2024 is concerned. Now, talking about the handover, like you mentioned, slight bit of cool off across all of the U.S. markets given the fact that they're going light as far as the Thanksgiving Day is concerned. Oil markets yesterday too largely unchanged, very range bound. Brent futures minor gains now trading around the $72.8 a barrel mark. But Indian markets, that continued to remain the story yesterday. A strong move, driven largely by the Adani Group stocks, and a very strong up move as far as HDFC Bank is concerned. HDFC Bank now trading near, lifetime high levels. Now, when you're talking about the broader end of the markets that actually outperformed the benchmark indices, the broader end of the markets, especially the small cap index, did very, very well, almost 1.3% higher, and that ensured that the market breadth yesterday was very strong. A couple of sectors that did very well. Defense stocks continue to do quite well. HAL as well as BL continue to build onto the gains that they saw in the session gone by. Talking about Asian markets, mixed set of cues. GIFT Nifty, after flirting with red, now indicating a marginal gap up opening for our own markets today.
30 points higher is what the implied open is suggesting. Vivek, thanks a lot for that. Over to Vamakshi now. List out the stocks you need to watch out for today. Vamakshi, good morning. What's on your list?
Well, good morning, Hormaz. Let me first start off with Godrej Properties. A QIP opened at a floor price of 2,727.44 per share, and sources suggest that Godrej Properties is likely to sell 5.5% equity via QIP at an indicative price of 2,595 per share, which is coming in at a nearly 5% discount to the current market price. Now, the company is looking to raise up to 4,000 crores via the QIP. Next up is NBCC as well as Hudco. Both of these counters will be in focus as both these companies have signed an MOU for development of 10 acres of land parcel in Noida for a project worth almost 600 crores. KEC International has bagged orders worth 1,704 crores in transmission and distribution business from Power Grid. Ashoka Buildcon has bagged an order worth 193 odd crores from Madhya Pradesh Purva Kshetra Vidyut Vitran Company. Vari Renewable Tech also on our radar because they've received an order worth 1,233.5 crores for ground mount solar PV project. Natco Pharma, keep an eye out for this one because they've sold 14 acres of land parcel in Telangana for 116 crores. ZF Commercial Vehicle, ZF Group has ended up selling 4.3% stake of its holding in the company to increase liquidity as well as financial flexibility for ZF Group's growth. PCBL, lastly, let's watch out for this one. Andhra Pradesh government has approved allotment of 116 acres of land in Naidupeta SCZ for the company. Now, keep in mind that the company had proposed to set up a manufacturing plant in this SCZ at an investment of 3,718 crores.
Vamakshi, thanks a lot for that. And over to Mangalam now, joins in with cues from the F&O space on the all-important expiry day. Mangalam, good morning. What a turnaround this has been, right, for the Nifty?
Well, it's been a very interesting series so far. Yesterday, the Nifty was up 80 points and the GIFT Nifty is indicating a 25-point uptick. What that means is that at the open itself, the Nifty would have gained about 100 points for the November series. If you look at all the series moves, you would see that, after 4 series of gains, the Nifty actually lost about 2,000 points in the October series and the November series. It's absolutely flat as compared to the close in October series itself. just a positive 70-point uptick. All of that came yesterday itself. But that doesn't tell you the story of the series. The story of the series is basically in the range. The high on the November series was 24,537. The low on the series was 23,263. So that's a 1,200-point range that we're talking about. And a lot of it played out in just the last few sessions. So between November 6 to November 21, the Nifty was down 1,134 points. And between November 21 to 27 itself, post-Maharashtra verdict, we had about 925 points on the way up on the Nifty itself. What's heartening, however, is for the third straight session, the FIs have bought in cash market. Yes, yesterday the purchase was just about 8 crores, but a purchase it nevertheless was. And yesterday both the FIs and the DIIs bought in the cash market, and the last time they both bought together in the cash market was only in September 26, 2024. The FIIs are playing long Nifty bank, short Nifty game in index futures. So the net sell is 120 crores. But in the Nifty, they sold about 927 crores, whereas on the Nifty bank, they bought 705 crores. Their long short position virtually unchanged at 35.65. The important part, how does the Nifty fare on expiry? Now, there are two schools of thought here. One is that the Nifty does not cross that 24,400 mark, and that school of thought is subscribed to by the 24,350 call writers. The other one is that if this Nifty crosses that 24,400 mark, there is room all the way up to 24,600. This school is subscribed by the punt buyers of the 24,600 call, which has about 5 rupees a pop. So that's an important one. The other thing that we're watching out for is strong support at lower levels between 24,150 to 24,200. Why do I say that? Because 24,200 put and 24,250 put are both active. So you have both support and resistance up for you on the screen. If the Nifty sustains above 24,400 for a long time, you can't rule out a dash all the way up to 24,600. December series tomorrow will be more important because 45 new stocks enter FNO. So a lot more for everyone to look at.
A lot more indeed. Mangalam, thanks a lot for that update. And time for a short break now. Up next, we get you exclusive excerpts from our conversation with the management of Titan on the launch of its Swiss luxury watch brand, Chariol, in India. Welcome back. Now on to a CNBC-TV18 exclusive. Titan's Helios has formally launched the Swiss luxury watch brand Chariol in India. My colleague Shilpa Ranipeta spoke to the CEO of the Watches and Wearables division at Titan, Suparna Mitra, and began by asking her how the watch caters to the luxury premium segment. Listen in.
Right now, we have limited distribution, and it should be. Like you said, it's a very high-end watch. We have more than 250 Helios stores. Right now, we are looking at placing, we've already placed Chariol in about 9 or 10 stores. We're not planning to expand in too many stores. Yes, analog watches continue to do well. Premium is a very big growth lever. I would also say the other growth lever is fashion. And I think in brands like Fast Track and Sonata, fashion is really, making the consumer. The fact that we bring in trending fashion in our watches is bringing in a lot of excitement.
Finally, in closing, I wanted to sort of understand, we've seen a slight slowdown overall in urban discretionary demand. I think every consumer company has sort of seen that impact in the quarter that went by. How are things for the watches division, and, how do you see it performing for Titan overall over the next fiscal? I think roughly it contributes about 10% now to revenues. Where do you see that number going in the medium term?
So we grew by 19% in net sales revenue in quarter 2, which was the last quarter. We've had a really good Diwali season, so we are hopeful of doing good growth numbers in quarter 3. There are also a lot of weddings, which all of India is betting on. So we are very optimistic about keeping that kind of double-digit growth for the next few quarters. I think, yes, there are pockets where there is certainly a slowdown. I think we are also kind of lucky in the sense that we cater to upper middle and upper classes of consumers. Certainly the kind of consumers that come into a Helios, that will buy a Chariol, they're all kind of immune to that economic pressure.
And time for a short break now. Up next, we get you cues from the commodity space. Stay tuned. We'll be right back. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. What are you tracking today?
Well, I'm looking at the precious metal prices, Hormuz, and one thing that bothers is the silver prices. Remember, we did touch ₹1 lakh a kg in the Indian markets, but from that, the prices have come down to 88,000. So a big amount of profit taking. And when you look at the overnight markets, the silver prices have fallen below $30 an ounce as well. So 30 was a psychological level, and we look at some more bearishness coming in for the prices. Same is the case with gold as well. There is some decline here as well. Well, a bit of a US dollar rally. The fact also that the prospects of US trade tariffs, inflation, stronger US dollar, all of these perhaps are weighing onto the markets, but the silver decline has been quite sharp. We haven't seen that kind of a decline on metals, though, because the rising cost at mines, fall in inventories, and pick up in China, because November, December are peak demand seasons in China. So that really seems to be supporting some of these metals. You have zinc, which is trading at a 4-week high, and in the overnight markets, copper and aluminum also have gained. There also are yet another noises coming in on expectations of China's stimulus going forward. That in turn also, in some sense, seems to be supporting prices.
All this hope around the China stimulus continues to keep metals in the news. Manisha, thanks a lot for that. Now, caretaker Chief Minister of Maharashtra, Eknath Shinde, has said that he will not be a roadblock to the government formation in the state. Now, he addressed a press conference yesterday and said that he will accept the BJP leadership's decision on who the next Chief Minister of Maharashtra should be. Both the BJP and the Shiv Sena are pitching for the CM seat after they, along with Ajit Pawar's NCP, registered a landslide victory in the recently concluded assembly polls. The BJP had won 132 seats on its own, more than double the Sena tally. Despite this, Shiv Sena sources told Network 18 that Eknath Shinde should become the chief minister, as he was the face of the Mahayuti election campaign. And that's all we have on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call up next to set you up for the expiry day trade.